I bought a new bike after wrecking my old bike, getting run over by a truck a while back.
What'd you buy?
I bought a Trek, last year's model, the FX2, which is like a sort of a commuter fitness hybrid. And
You know what?
it's they already came out with an FX3, so it's cheaper. The FX2
You get
is
it
cheaper.
right? Yeah.
Yeah. And the woman was funny. She's like, I think you should go with the 3. These don't really have good brakes. I'm like, they have freaking disc brakes on them. I was using the 2 freaking pillows that got smushed together on my old bike. These got disc brakes. What are you talking about?
That lady should see what we rode around when we were 12.
I know. I mean, it was ridiculous. Honestly, I'm happy with the price because it was a little bit more than I paid for the bike that I bought in Chicago before we left Chicago. And I had that thing for 5-7 years. So I'm good. I mean, this will last me a while.
But do either of you have an electric bike?
What's that?
Do you have an electric bike? You don't either,
no,
Michael?
No, because I want it for exercise, and I know myself. I'd be
like I use it for transportation too, like to get back and forth from the restaurant in the summer. I want to ride a bike, but I don't want to be covered in sweat when I get there when it's 90 degrees.
You can't avoid being covered in sweat in Florida. It's literally like you walk in somewhere sweaty, and you're surrounded by 45 other sweaty people. So it's
That's New Orleans. New Orleans in the spring and in the fall, which I've been there both times. Just everybody's sweaty. It's kind of funny to me.
Hey, speaking of Florida, I want to point out to everybody, because we're going to start doing this every show, that April 11th, Jimmy and I have a panel, and we've already got two people on the panel. Anne-Marie Band and Tracy Shukart are going to be on the panel with us.
Fantastic.
And then we're going to be walking around or sitting around, haven't really decided yet, interviewing people. So if you guys want to make it there, there's a link in my Twitter and Jimmy's Twitter. And we'll keep putting that link out day after day.
We'll start putting up every day from now. But to correct what Bobby said, he said April 11th. It's April 12th, correct,
April 12th.
Bobby?
I'm sorry. Yeah, it is April 12th. Our panel's at 9 a.m., but then we'll be there most of the day.
We'll probably be at the bar on probably a Thursday night and then relatively early Friday happy hour.
Well, this isn't confirmed yet. We may have our own bar to where people have to come to talk to us to get a drink.
It's fantastic.
I'm working on that.
I have bartending skills if they want to put me to work.
That is good to know.
Right.
That is good to know.
Oh, yeah, but you have a podcast to do, if I remember correctly, right? Welcome to the Futures Edge Show. I am Jim Uriel. That is Bob Iacchino, the co-host, and that other guy in the wild tie-dye shirt that is a Grateful Dead theme, I assume, right, Michael?
It's actually a Joe Bonamassa shirt.
Wow. Really? How many times have you seen Joe Bonamassa in concert?
A few. I've seen a few. He's amazing. I love Joe.
He doesn't sing, right? Does he bring a vocalist with him, or what does he do?
He sings.
He does? Oh, I thought he was just a guitarist.
No, he sings.
Oh, I was not aware. I'll go to one of those shows then.
Yeah, I mean, he seemed offended by that. Jim.
Yeah, he was offended.
No, but Joe, you got. I mean, he's a great guitar player, and he's not the world's best vocalist, but he sings all his own crap.
Well, I'm from Palatine, Illinois, the home of one of the great guitarists who never sang but had a band named after him, Terrible Ted Nugent. Which I don't know why he always called himself the Motor City Madman. He was from Palatine. I remember it pretty vividly. His mom still lived there until she died like 5 years ago. So, but anyway.
We should get him on the show one of these days.
He'd be funny, right?
Yeah, he would be.
He's again, talk about a guy like, this is the whole point of everything. It's so mixed. Like there's so many things I hate about him, so many things I like about him, all at the same time. He's obviously a narcissist, cocky guy. There's some stories about, some questionable relationships with women from back in the day, but he promotes very, very positive things as well. So nothing's ever easy. It's all back to Thomas Sowell. There are only trade-offs. There are no solutions. Anyway, Michael, who is the chief technical analyst for Path Trading Partners, and he is a brilliant technician. And what are we going to look at first?
I think we got to start with the broad Marxists, like the S&P.
Sure. I was hoping you'd say that because we are taping this on Tuesday afternoon. The S&P took it right in the nards today, to the tune of down. By the way, I'm trying to bring back nards. It was something we all said back in the 70s, and it went away. Can I get your guys' commitment to bringing back nards?
Nards it is.
No, that's a hard no. That's a hard one.
Okay. Wait, one or two.
Nards,
I got
it
one or two
is.
there. But anyway, so the S&P got just a huge kick to the nards. I just saw Linda Raschke just tweeted a second ago that only 18 out of the 40 stocks of the 40 biggest stocks were lower, meaning she thinks it's just a flush. Let's take a look at the charts and see what it's all about. Okay, tell us what you see. By the way, it's been a long time since we've had a lot of new viewers lately. Could you basically just go over the process real quickly?
The process.
Well, I mean, you draw in the harmonics. That's of the move that's in question. That's every 12.5% is the harmonic, correct?
Correct.
The three lines are the 200-day, the 8 and the 21 exponentials, right?
And the 50 exponential is green.
Okay, and the 50 exponential is green, right? Okay, which is which? Can you just tell us which one is which, and then we'll move along?
The 8 EMA is orange, the 21 is blue, the 50 is green, and the 200 simple is red.
And why do you use the simple instead of the exponential? I know the answer, but say it.
Because it tests out better probability-wise, and that's what we base our stuff on.
Perfect answer for a technical analyst.
Mm-hmm. We don't just guess. We use historical patterns and research to test out our things. So
we don't just pull stuff out of our nards. I mean, it's whatever happens.
Exactly. See, Mike, it rolls off the tongue.
It really does.
There was no rolling at all.
That rolled, Mikey. I'm sorry. That rolled.
That thudded.
Okay, so everything looks good. It looks like we had a nice little pullback, and it has tested nothing, correct?
It's tested nothing. I mean, we could easily still pull back a little farther to 50, anywhere from 50-25 to 50-50, and it'd be a normal correction. I'm actually not so sure. We're getting thinner and thinner leadership. Yeah, there wasn't the massive down today with a breadth, but some of the key leaders are really breaking down. Like Apple's been breaking down, Google's been breaking down. They've hit some key levels, so we could get some bounces there. But I'm expecting actually potentially a multi-leg pullback here, which could be like a down move, a counter up move that does not exceed these most recent highs, and then one more pullback. Now, what I always like to do, though, is we list out the critical levels that I'm watching, because that's extremely helpful. In the short term, the very short term, if it continues even on a multi-legged pullback, the first key area is about 48.75. We start breaking.
What percentage move is 48.75? Do you have any idea?
That's the 62.5 pullback from the most recent highs that we made on the week. It's the March 5th when we're recording this. So you go from the highs.
I'm sorry to interrupt you, but why you look at the 62.5 may be a good thing for you to explain to some of the newer people.
Sure. The 62.5 is when you close beyond it. So for an up move, like we closed beyond it in Bitcoin, which I talked about the last podcast, and I said, okay, this drastically shifts the probabilities, and Bitcoin exploded. So the reason I'm watching this first 62.5 is because if we close below it, then it could retest the lows from January. The probabilities will shift towards more favorable, that it'll retest a low area from the beginning of January.
And at the risk of showing of switching subjects at an inappropriate time, Mike, if you put up a Tesla weekly, which by the way is down about 36% or so from the high close on Monday the 17th, and you do the harmonics from the high point all the way in October of 2021 to the low point December 27th of 2022, going all the way back to last year, you do the harmonics there, and the market went right up to the 62.5 and did not close above it and turn. So that's why he looks at that level so closely.
Well, the only research I ever did was this Tesla chart on it. No, I'm just kidding. No, I've researched that for many years.
It's just a really good illustration of why that level, why he likes it. It tests out really well.
It tests out. It's not perfect. Nothing is perfect in the markets, but your probabilities jump drastically on a closing basis. So if we were to close below 48.70, the technical level is 48.72.75. I'll be watching. I'll have an alert set around 48.75. But if we close below that on a weekly basis, then I'm going to ratchet the harmonics back, because here's where it gets real interesting. And I wouldn't worry too much unless it, if it started to close below there and retested January's lows, it would be somewhat critical, but it would not mean you'd necessarily have a down year. I mean, we'd have a fair amount of recovery to do, but it would not be unheard of given this insane run since October. Now, what would get me worried from the bullish perspective then is a close below 45.10. So I'm just going to go off of 4,500. Why? If you lose that, not only do we lose the weekly rotation zone, which is between the 8 and the 21 EMA, which on a multi-leg pullback, that's where I'm watching it to first rotate, because that's the most likely area it will rotate. And we haven't really reconnected with it since we took off in October. We moved sideways. The last correction at the beginning of January was a sideways correction. We had a single pausing bar in the beginning of February. And now we don't know how this week's going to end, but this is not, these pullbacks have been nothing. The key line in the sand, though, was just remember 4,500 at this point. Why? We would have lost the weekly rotation zone. We'd be below the key breakout point of last July. That was July of 23. That was the first target when it really came off the October lows with a vengeance. We'd then break above that, and that would be major support. We'd also lose the 50-week exponential moving average, which is not normally good. And right below that's the 62.5 from the next major swing. Because if we lost that 4,500 level, then we could easily return to the 200-week moving average, which was a major support back in October 22, and the takeoff point from the October lows. So that's why I like to come up with the two critical points. 4,500 is the uh-oh level, where things are really starting to change. In the closer term, 48.72. We might not even get back to that level, but those are the two alerts I have going in my mind right now. Other than that, I just have to sort of count on whether it be a sideways correction. So here, December to January, you can see here on the daily chart, this is roughly a sideways correction. Went up a little, went down a little, went up a little, and then broke out. We had a couple pullback corrections, but they were very minor. So this so far is nothing. But what concerns me also is when we get moves like this, all my Super Bowls that I talk to, they're like, is the market going to crash? Why would you even ask that? Well, because it's gone so far. They know something's wrong or something's not right under the circumstance, but they're still like, I got to still buy the dip, but is it going to crash on me? And we're still getting, is it going to crash comments on a little pullback like this.
You said something that I found very intriguing before about Apple and Google and the potential loss of leadership. Now, when you will look at that chart and look at the chart of the NQs, you also constantly have a Google and Apple up. And if they start to lead the way, do you still have to get the confirmation technically in the indexes, or will sometimes you just jump the gun and be like, Apple's falling apart? It's just a matter of time before the NASDAQ and the S&P get up.
That's a great question. And if you wouldn't, you'd humor me for a couple minutes, I'll tell you exactly what I watch, even if I don't have positions in them. So we had the Magnificent Seven. At some point, you could have lumped, Netflix back in there. So let's call it the whatever. You have the things that have really been on a tear. We already looked at Tesla. Tesla also triggered a major topping pattern back in October, recovered a bit, but Tesla's lost any leadership in this whatsoever. It's already broken down, and I'm expecting Tesla to be dropping below 150 pretty easily over the next few months.
Fantastic, whatever that was leading the market. Is that what you're referencing it?
Yes, because that was one of the market leaders. Apple, all right. Not only did it trigger a massive double top, it's now gone beyond the first target. It's going into the second target areas, and I'm expecting it to probably find some support near the October lows at the end of October. And we could get some, bounces in here, but bounces now in Apple are to be sold from a technical analysis point of view. So it's just waiting for the bounce up and then the rollover setup. So Apple's losing it. Even if it holds the October lows, it's really lost its leadership. I mean, it's been making lower highs and lower lows. It just broke a major level of critical support. So on any rally back to the 180 area, if it can even get that high, you have so many people who are accumulating it since the beginning of this year. The a lot of those will turn into sellers just trying to scratch out of it. So Apple's lost it. Google, which I've been talking about this very regularly, I was expecting it to then break down and test the 200 area, and it still hasn't closed below that 62.5 harmonic, which is 132.80. And that level is not going to change anytime soon. So if you start seeing it close below 132.80, especially if it closes a week below 132.80, I'm expecting then Google to retest its October-November low area. So this is losing leadership. And so you have some of them. Microsoft, look at Microsoft. I mean, Microsoft just got hammered today. It's down almost 3%. And if it starts breaking 397 on a closing basis, going to start watching for the bigger pullback in Microsoft. And that could easily get back to, 380. If it closes below 386, then it becomes the uh-oh moment for Microsoft. So some of these major stocks are starting to wane, and you're getting it more narrow, like Nvidia. Nvidia's still been on a tear. Would not be shorting Nvidia because we don't have a topping pattern yet, and it's still a very dangerous short, but it's overextended, incredibly overextended. Now, it just means the leadership's getting more focused. It's not a short yet. So you still have Nvidia chugging higher. You still have Amazon is coming off some recent highs, but it hasn't broken down. If you start getting closes below 165, it becomes the uh-oh moment in Amazon. It's trading right now about 174. So Amazon's starting to wane a little. Meta is still holding up nicely. It's one I'd really start watching, because if Meta starts closing below about 469, 468 level, and then follows through and cannot hold 454, that will be another thing that's been holding up that's in a breakdown pattern. So this 8 or 7 stocks is really getting consolidated to, at this point, 4. Netflix has been on a tear, and 5. It's still hanging in there. But if it starts closing below 536, watch out. Really watch out this market, because it's getting so narrow. And you don't have enough other stocks that are consistently forming long-term bullish patterns that they will be able to pick up all this lost leadership. That is my concern. Until that happens, I mean, any of these stocks, Apple's really losing it, but we could get to those October lows with Google, and we could get bounces out of it, but the leadership's getting more and more narrow. I'm not saying this rally has to end or anything else, because you go with the trend until you either get a massive topping pattern or you break some of the key levels we already talked about. But I'm getting cautious, and I would do, at least on a weekly basis, look through some of these stocks, even if you don't trade them, just to see if they're breaking the key levels.
Mikey, I got to ask you the Tesla thing. So you and I have talked for years about how you know some of these Tesla perma bulls. Tesla made its all-time high close. I think it was November 4th or something. It was definitely early November of 2021. And it's down about 56% since then. And it made its 2023 high close somewhere in July of this year, July 17th, it looks like. And it's down 38.12% from there. How do those people, do they still not accept that things can go down? And by the way, I think all three of us, let's call it medium term, are still bullish. Anybody chime in if I'm putting an opinion in your mouth. But do those guys, are they finally like, maybe we shouldn't have bought every dip, or are they still all about it?
They're less of the buying the dip in the Tesla. Some of them are still, they're like, all right, I got long-term holdings. Tesla's going to go back up.
It's that's it. Okay.
It's now shifted
to the long-term portfolio.
Yeah, it was a trade before, but then all of a sudden, I've wanted to hold it long-term the whole time, so I don't really care.
Well, because it's sleeping right now. It's taking a break. So now this is what concerns me. They're all in Nvidia. Whichever, you got to buy every dip in Nvidia. And I'm like, okay, it's getting, they're chasing the next hot thing. They're still like, I'm in Tesla, but I'm not buying any more right now. It'll come back, but I gotta keep buying Nvidia.
Oh, people
So
will never learn.
that mentality worries me, because I'm not saying Nvidia has to stop going up, but if you look at the chart of Nvidia and you just, all right, it's not good on any chart. If I just hide a lot of key stuff and just leave the rotation zone on here on a weekly basis, when you pull this far away and you have cycles pinned to the top and it's massively overbought. No, there's no great short setup yet, but I wouldn't be buying every little micro dip in this, hoping it's going to just keep pushing higher. Could it hit 1,000? Sure, because there's enough people gunning for 1,000 that it could still eke it out. But, you start to see these things turn on a dime, and then everybody's rushing for the exit and they're like piling out, and some people are still buying the dips, and I wouldn't want to be the dip buyer when this thing turns. And so,
Without
you can
mentioning its name, I will say, as most of you guys know, I bought it about 3 months ago, and it was almost kind of a joke because I jumped on the Nancy Pelosi trade. But I've trimmed it to 1/3 of the original position, and I might even trim all that and then replicate it with some sort of call spread or call fly to stay the bullish side, but to leave my risk lower. You guys agree with that?
Yes, extra disclaimer. Jimmy cannot recommend stocks, nor is he. He's just saying
No, I'm
what he
not.
does.
Yeah, I didn't even say the name. Right.
No. Go
Yeah,
ahead, Mike.
I definitely recommend. This is not the time. Even on dips, I'd be aggressively putting it on. I'd be more unwinding on rallies and locking stuff some in the bank, because it's getting so overextended.
Damn
But
right.
you leave something on because you ride the trend until the trend ends. And as we know, you don't try to call a top and you don't try to call a bottom. You know, especially with stuff going up at very key levels, or what we call targets, you can either move up a stop, take some off, or do a combination of both. And that way you're still riding the trend as long as it lasts.
And last question, then I would love to move on to like something like gold or Bitcoin, if that's okay with you guys,
Sure.
just because those things I think have been freaking fascinating lately. So you said, and we've all said, and we all agree, that the fabulous 7 or the 8, whatever, is now down to 4. So it seems like the value of each one is becoming more and more important. So if another one drops, another one bites the dust, that could be all we need to start the flush that I always thought there was going to be a quick, 8% flush that's going to start the easing cycle. That all kind of fits in if those things all happen like that, correct?
Yeah, it's just the timing of it.
Yeah, right.
And again, it's what we've talked about in the past. If somebody goes back to review past things, I'm going to be watching again after this initial, whether it stops this week or it keeps going. I'm going to watch for the secondary reaction, which is a move back up, because the next bounce move will tell us a lot about how well this market is going to snap back or not. If people learn to really focus not on the primary sell-off, like in this case, but the next secondary reaction, and do extra analysis on the secondary reaction, because if you don't have a lot of breadth participation and some of these mega caps that have been leading can't really eke out really new highs on substantial volume, if they start turning again, that second reaction falters, and then that generally leads you to the bigger cascading pullback.
Makes sense.
Did you want to look at gold?
I do. Bobby, is that cool?
Yeah, very much so.
I think the gold story and the Bitcoin story, I think what's happened in the last couple of weeks is really, really important. And I think it's indicative. I think what the moves in Bitcoin and gold are a no confidence vote in stewardship of our fiat currency. I believe there are no confidence votes in the people who are spending money like drunken sailors and amassing $1 trillion of national debt every 100 days. I think it's very, very interesting to me. So let's take a look.
Yeah, so I mean, gold, I've said on before, it's been in long-term bullish mode. It shifted last year based off purely technical analysis, nothing fundamental, purely technical analysis. And if you just look, two people, probably nobody who listens to this podcast, because they're all smart people who obviously tune in, especially to this episode. But if you don't just look at the recent price action, if we take a look all the way back to 20, where it spiked up, above 2000, came back down, spiked up above 2000 again in March of 22, again in May of 23, making a triple top. And this all provided a key resistance area. We actually broke above it back in December of 23, so 3 months ago, came back down. And if you noticed, if you just take a look, let me see if this looks okay on a monthly. So if we take, yeah, it does. Here we go.
Yeah, it's
So
about as good as clean as it gets. But anyway, go on. Yeah.
if you look at this, if I put my horizontal line across here with my pointer, you see, especially the candle bodies, this is a major support level. It finally broke above it, came back, testing it, and this is why the rotation zone is so wonderful, because when you see something break above a major resistance level and then catches on the rising rotation zone, and this is on a monthly chart, and then rotates back up like this, it's again no guarantee, but it's a wonderful pattern to watch for a continued move higher. So this has set up a very strong base because it's retested support and moved on up. I absolutely love this pattern, and it gives a great level.
It's about as good as it gets, right? I mean, that's everything we look for, kind of.
Right. Now, I also know that if I just come back here to my harmonics, this is even, if we then were to close back below 1987, let's say we eke out, we just made did it make a new high, all-time high today, or it came within really close? I didn't check it today. 2152.3, 2155. No, it's right there. But the key thing, the 50% pullback from this level is around 1987. Also, that weekly 50 EMA is, if we were to come here and either top here again, like we've done, eke out a new high and then collapse back below that 1987, would not want to still be in gold in the short term, because we could easily head back to 1864 and the 200. However, if that's a key line in the sand, if that doesn't get violated, and we may never even see it get anywhere close to that, because it's got all the support base in here. So my next target's higher. The next major target higher is about 2220 to 2235.
Nice. Bobby, I have a question for you.
Yep.
Okay, so about a month ago, I came into some cash. Let's just say I want to bet. So I went to my gold guy at Harlem Burke, the place down in the city.
Yeah.
And I don't know what the answer to this is. Normally the questions I do. So I went to buy some gold, and the Buffalo and the American Eagles, those were trading 80 over spot. He also showed me this coin. He was like, it's just gold. It's not an actual minted coin. It's just gold coin. And that was trading for 20 over spot. That kind of scared me. I don't know anything about numismatic value, but I went for the American Eagles. Do you you have any opinion on that or no?
The only thing I would say, because I've done this, is weigh it. The American and the Buffaloes are over an ounce. And they don't really tell you that when you're buying them. So a lot of these guys,
I have a rapport with them. It's not like I trust the guy.
I'm just saying, like when they're minted coins, they're over an ounce.
Okay.
So when they're trading over spot, it's generally because, yes, they have an opinion, but also like they don't tell you. A lot of these guys, they melt the coins down and they make bars, and that's their spread. Right? They pay you for an ounce and a couple of bucks. And you always feel like when you buy one, you pay a little bit more. When you sell one, you pay a little bit less, but you're usually over spot.
Yeah.
So they make that spread. And then again, a coin themselves are generally way more than an ounce.
Yeah. My gold place is buying for over spot, not under spot. So
I understand.
The demand is big.
Well, they should, because when I go to sell one, they're usually 20 to 30 over spot.
Right.
When I go to buy one, they're usually 60, 70 over spot. They're always over spot. And they should be, because they weigh more.
Oh, gotcha.
People don't know about coin. People will say, I have a 1 ounce gold coin, and I got a great deal when I sold it. No, you got the weight.
Yeah.
Right? You got the weight plus spot. And they will put their opinion in that. So next time you have one and you get I'm sure you have a food scale somewhere, a digital food scale. Pop it on the digital food scale. You'll see that it's over an ounce.
Okay. Cool. What do you want to go to next?
Can I chime in real quick?
Yeah, please do.
Because Costco occasionally gets in Canadian maple leafs.
Yeah, they go so fast.
They had some in. I'm just looking at my calendar. The night of February 23rd, they came in online. You can order them. And they're the good Canadian make-believes, and literally 3 hours, Costco was complete. And I'm not talking local Costco. I'm talking nationwide. They were sold out. 3 hours.
Wow.
Yeah.
That's the vote. That's the no confidence vote I'm talking about, right?
Yep.
Yeah.
So, and they Costco limits it to a max of 2. But if you're looking, and maybe you don't have a gold deal, or just when those things pop up, if you're looking to do something, they're certified, they're all legit. Costco's not going anywhere. They're going to stand behind, what they're selling, and they sell out incredibly fast. Again, I don't have any personal thing from recommending that. I'm just saying watch for it, or at least watch because right now they're just not sticking around, which is a really strong vote that the general consumer is buying gold from Costco.
Yep.
Yeah, wild shit.
Bitcoin.
By the way, why are you switching charts? I don't love to pat myself on the back as much, but on January 24th, I gave a speech at an agriculture conference in Phoenix, Arizona. The whole theme of it was profligate spending, running out of the reverse repo facility, and that the things to be long were Bitcoin, gold, silver, real estate. It's working out pretty well so far, is all I'm saying. So
yeah, Bitcoin, here's the exact, we've talked about that 62.5. Here was the close above that 62.5. And then the targets, I said the next major target was 62,314, where if you get down the daily chart, we paused there really nicely for about a week. Took off from that, and then after that, I watched for any key topping area. My key top area was 65,525 to 69. We just eked above 69. So watching now, this is very overextended, does not have to pull back, does not have to crash, but I'm at least watching for some kind of consolidation. The next higher target, should we really get a solid close above 69,000, is 75.7, and then 82,350 are the next key targets. That is if it closes above that 69K. I will caveat again, we are very overextended. That does not mean the last time it was very overextended, though, was back in beginning of December. You see here at the bottom of the chart, this is a 5-period RSI. We had it pegged green for extended time. We also had weekly cycles at a top, and I call this a sideways correction. You see how it took multiple weeks and just based right below this. It spiked up that 62.5, which I know we mentioned in the podcast, but did not close above it. It based, and then we got the breakout move ahead above. So there's 2 things I'm watching for. Either a pullback area, roughly, and my key support, if we do get a pullback move, is anything above 53,000, or at least some kind of sideways correction basing here before we take off. But there's no major long-term topping pattern yet. There was some substantial selling after it eked out the new high today, but it's still, I'm going to watch now for the secondary reaction back up and see how it reacts again at that 69K should we get back up there.
that's just an inside bar on a daily, right? I mean, nothing
The daily's an outside bar today.
Oh, the wick. I didn't see the wick. I'm sorry. Yeah, I was just
it's an outside bar, but it's also Bitcoin. So
right.
It also has that's a long wick, even though it closed negative. But I'll also say on the Bitcoin front, I don't know why, but 82,000 was the number in my head for when the central bank digital currency would be okay. So let's keep an eye on that. If Bitcoin gets 82,000, I think there might be an announcement that the CBDC is ready for prime time and Bitcoin's now illegal. We'll see.
Yeah. By the way,
I don't
guys,
actually think that's going to happen because BlackRock has an ETF.
Right. That's the only reason I got into Bitcoin, as you know. Well, actually,
I do know that. I agree with you. That's my only reason for saying that. Yeah. BlackRock's in it. So until BlackRock tells the president that they can do this, it's probably going to be okay.
By the way, you guys think we're joking? We're not joking. BlackRock bought the government fair and square.
Yep. They bid on it. You didn't outbid them. What are you going to do?
Did not.
You sent your $5.
Don't necessarily about fair and square. Let's
just say fair and square might be a mischaracterization.
They did buy the government.
Everybody. Right? We'll say that.
They have check stubs to prove it. Okay, what do we want to look at now, Bobby?
Crude, please.
Perfect.
Crude. Loving crude.
Me too.
I have a crude sort of a thing I wanted to bounce off you guys a little bit here.
Go ahead.
It's a daily or a weekly, Mikey?
This is a weekly.
All right. Can you put up a daily real quick? So one of the things I've been looking at, when people have been asking me about crude, because I've had a horizontal line at those top closes there, kind of where the 200 is, like somewhere in that area. I had a horizontal line there, and I've been telling people, yeah, that line's fine. And I've been telling people that somewhere in that area, if we get a close above it and a pullback, I really like the pullback if it holds. There's always that if it holds parts. People always want to say, well, it's pulling back to where it broke out, so I'm in. You get crushed from the head fake when that happens. The head fake, you want to block the second shot, right, Jimmy? You don't want to go up with the head fake. You want to go up on the second one so you can actually try and block the shot. So this is what, if we rally over the next couple of days in crude oil, I really like this pattern. Now, also, Mike put the upward sloping channel in there. So minimum, my target was going to be somewhere around the 80. I actually did a CME video recently where I said if we get a weekly close above 82.30, we can extend from there. And I put that as the weekly close because that was my target for this particular breakup. So Mike, where am I crazy and where am I okay?
Well, I'm watching, I'm actually watching a couple key things. We've been stair-stepping higher, still making higher highs and higher lows. Similar to, then you're very spot on to point out we've had to pull back. This was the high area that we established back all in November. Multiple times in November. We retested it at the end of January, and now we've been slowly chipping away. We broke to new highs, especially on a closing basis when we closed Friday, March 1st. Yeah. On that close, that was the highest close since November 6th. Now we're pulling back. It's literally make or break right now. I'm watching for a rotation back up. The only thing that starts me at least watching for the bigger pullback to the bottom of the channel is if we close below 76.40. And the major thing that I cannot get bearish, I could, again, we close below 76.40, I could watch for the pullback to the bottom of the channel. But we cited this so many times on this podcast since you have me on every month, the magic 200 SMA. So unless we get a weekly close at this point below about 73.30, there is no way I can shift into any longer term bearish mode. And you can see on this chart, and we've highlighted in the past podcasts how many times it tests the red line here, but does not close below it. That's why it's necessary on a close. So to sum it up, in the short term, I'll be watching for a bounce in this area, right around the 78 area. If we don't get it, my key line, the sand in the short term is 76.40. We close below that. My level is 74.50. We start breaking below 74.50. I'm expecting a pullback to about 73.40. You close below 73.40. That's the only way my bullishness in the medium term can be erased. Other than that, I will continue to look for moves going up, and my next minor target area is 81.37 to 82.19. The next major target, should we again continue to move higher, 84.80 on a closing basis. That's the 62.5 harmonic. Then I get into a more aggressive bull mode because we could easily start targeting the low 90s then.
Bobby, I have a question for you. A couple days ago, there was an announcement where at first when I read it, I thought that meant they were going to be selling the SPR again, but they're not. They're selling natural gas reserves off, correct, and closing a facility. Yep. There is no, are they going to do any sort of malarkey, to use my favorite old school word, to try to drive crude and gas prices down prior to the election? If so, what are they going to do?
The crude one is going to be tough. So part of my fundamental thesis, natural gas prices, to drive them lower, I mean, they're really low. Like, as I'm saying this, Mike, if you could pull up a natural gas futures chart, we can see historically, we do a monthly or weekly, whatever. Sure. You can see historically, I mean, they're really low, right? They're as low.
That's not a major bottom area.
Yeah, they're as low as they've been. So to push those lower, especially going into, the election season, which would be the next winter, it'd be tough to see those spiking too much from there, because natural gas is in a massive surplus. It's trillions of cubic feet of surpluses. The crude oil thing is going to be tough. OPEC Plus hasn't even announced their next meeting date, which is supposed to be next week. sometime. Now, again, by the time you guys are watching this podcast, it may be out. But their production cuts that they're currently involved in expire in April, which brings me to the sort of bullish part of the fundamental bullish thesis for me of crude oil if the breakout holds. I could care less about my fundamental view if the breakout was a head fake. Then I don't give a shit about it, right? But the thesis for me is supply's actually tightened a little bit. You know, we had a jump to 13.3 million barrels a day of US production, right? That then dropped to 12.6 million. Now it crept back up to 13.2, but still didn't get back up to the record. And when you look at US rig counts, they cannot sustainably get back up above 500 rigs. So what that tells you is that shale rigs themselves, I've said this a million times on this show, the bulk of their production life is at the beginning, not toward the end. Traditional rigs, it's pretty consistent for a long period of time. Shale rigs, a lot in the beginning, and then it falls off a cliff. Still produces, but you can have a well that's doing, 2,000, 3,000 barrels a day, 4,000 barrels a day for 3, 5, 6 months, and then next thing you know, it goes down to 80. I mean, they fall off a cliff. So if we don't start getting money spent on rigs, and you're seeing the administration again double down and get even tougher on fossil fuels as they get tougher on Israel, as the election approaches, right? So we're seeing all kinds of juxtapositioning in terms of energy that could be nothing but political, right? So you combine that with OPEC hemming and hawing. The reason I brought up OPEC is usually when they do this, they're trying to figure out a justification to get the price higher. It's not the other way around.
Right.
If they're going to go ahead and leave things the same or, increase production, they don't usually struggle to find a date. Now, that's not 100% prediction like anything we say on the show. That is not a guarantee that they're going to extend the production cuts. But I'd wager that not only are they going to do that, they might even cut them a touch more. Then the problem becomes compliance. That's too much of it already. So I don't know how much more they can do, Jimmy, without actually getting people to understand what's going on and be actually scared about the levels of SPR.
Well, will we dump any more of our SPR into the election?
I think they might. I think they
So do
might.
I.
And all
So
that's
do
going to do is put a higher floor in the price that you buy it back at. Because,
Yeah.
it won't. Even the Department of Energy said that the release of the SPR immediately didn't do much.
Yeah.
It was like a 6-cent drop at the pump that then, made some people happy until the supply chain, which was the problem, right? As it was for the bulk of the excessive inflation.
Right.
The core inflation is too much money printing, but the excessive inflation that we saw was the supply chain, and crude oil was suffering from the same thing.
See, I want to get rid of the metaphor shoot yourself in the foot, only because if we're talking about our government, particularly as it pertains to energy policy, there's like bullet holes riddled through your feet. I mean, you can't keep shooting the same feet, right?
They're starting to shoot themselves in the nards.
They're going to shoot themselves in the damn nards is what they're going to do. Michael, get on board with nards.
Once you achieve nards, I'm going for it.
Can we keep on the theme? And here's why I bring this up, because Mike Singleton, who's a big friend of the show, Mike's been on a split show with him before. He's been on a show with Mike Singleton on the show. He's been on our show, both of our shows, multiple times. Believes we're in a reflation environment. And in a reflation environment, per Mike's research, Mike Singleton, not Mike Arnold, energy is the best performing sector. Our other friend, Shayna Orchek-Seisel, likes Diamondback Energy, ticker symbol FANG, and it's one of her favorites. And I kind of like the chart. So I want Mike to talk me down off the ledge because I see a potential, thank you, Mike, I see a potential double top. But I want to talk about where this is a good entry and where it isn't, because a good entry might be if the double top triggers and plays out. That might be a good time to enter. Before you go into this, Mike, good, you have a weekly up.
Yep.
Add in like Valero and then delete it. Then add in Chevron and delete it. And add in ExxonMobil and delete it. And you'll see that Diamondback outperforms those names because, again, this is Shayna's work, not mine. They have a lower break-even price on crude oil than the bigger diversifieds do. So if you put like a comparison chart, you hit that little plus next to the symbol, just type in XOM, and you'll see how much it's outperformed Exxon, right? It'll just
Bobby,
be
do they pay you a dividend, Diamondback?
I don't know. That's a good question. We could
If
see
you don't know, it probably is insignificant, I would guess.
Yeah. So there's the outperformance against,
Wow.
ExxonMobil's been suffering. Type in Valero, which is VLO, recently outperformed Valero. And now type in Chevron, which is CVX, which again, it's outperforming some of the bigger downstream diversified companies as the price goes higher, right?
Yeah, Chevron. Yeah, it's all the way down here.
Exxon and Chevron are the two that I own, so thanks for rubbing that in. But
Yeah, but I mean, Shayna told us about FANG last time she was on our show. So the spike that we recently got coincides to the move above 78 that crude oil experienced prior to these two down days. So anyway, that's why I want to look at FANG.
I think that Volaro should be renamed Volare for the Dean Martin song.
I like it.
Whoa.
And
Anyway.
didn't Chrysler have a Volare?
They did have a Volare,
Yeah,
yes.
Chrysler
I don't
Volare.
even know what the word means. What does the word mean in Italian?
Volare?
Yeah, Volare.
A lot of it.
What?
A lot.
Oh, okay.
Yeah.
Again, the weekly chart, not this exact chart, but the same pattern. So we had resistance forming in June 22, retested a little higher high in November 22, retested in October of 23, catapulting through it. Now, so yeah, could we, if crude starts getting a bigger pullback, could we get a pullback in here? Again, I wouldn't be worried on a weekly basis unless we close below 162. On a daily basis, if we close below 174.39, could I watch for some key pullback levels, especially about 170, or the next key area I'd look for is about 167 for pullbacks and then bounce moves. Those would be the two targets I'd use. But there is nothing in this chart on the weekly basis. We have the rising rotation zone. You see that 62.5 is down at that 162 level. So that is a great, if somebody finds, a pattern, a bullish pattern on any pullback, I know where my stop would be. Can't give specific trading advice, but it would be just below that 162 level, because if that breaks, the probability shift that we could easily retest the key support area around 150. So anything else, I'd be looking for levels for bullish patterns, or depending on whether you do accumulation or you're just looking for any kind of pullback bullish pattern, that's what I'd be watching for. Now, if we base sideways and we can't trigger this double top, again, that would be on a close below 174.39. We could easily do a sideways correction and then break out higher. The next minor level, which was established from the harmonics from the low back in March of 20 to the high back in November of 22. The very minor level would be 188.25, which I definitely use as a stop raise. And then the next major target is right around 207.
Fantastic.
By the way, I need to correct myself on Volare. It means fly.
Fly. Okay, we'll fly right up to the stars, away from the shuffle and cry. Just like birds of a feather, a rainbow together will be.
Oh, boy.
That's outstanding.
All right. If you stop singing if I go for nards or
no, yes, that is a fair trade-off.
That's a fair trade. I got one more stock I'd like to look at, Jimmy, before we close it out. Is that okay with you?
Sure.
So I've been hearing a lot of complaints about Uber's prices lately. And Lyft apparently had a good earnings report. So I'd like to look at Lyft.
Okay.
Ooh, that's something that I really like. I'll tell you that right off the bat. It has to prove a few things.
You like the service, or you like the...
No. I like that chart. I like the rounding pattern. I want to see a good sharp move.
I really like this. I was hoping you'd put up the weekly. I really like it.
Yeah, a rounding bottom is a very good long-term. I was just seeing where I don't have it up here. Very good long-term bottoming formation. So when you see this rounding bottom, it's also where you get the traditional, cup and handle thing forming. So
that's
we could
really
be doing
a thing.
a cup and then a little handle here. The real breakout level is on a closing basis above about 2050 on a weekly. In the short term, the breakout pattern is roughly about 18. You close above 18, it starts getting, that's been very key resistance. And as long as it does not form a double top, which is not in that territory yet, but if it closes above 18 and then we're revert and close back below 1540, I wouldn't want to touch it in the near term. But if it closes above 18 and then does not close below 1540, that could be a good thing to watch with a follow through close above 2050. And then I would have a full, at least in the short term, my initial major target would be around 29.
That's a really nice pattern. I really like that. And I will have that up for the next couple of weeks, looking for the potential breakout in the settlements to put on some options trade for a significant move higher.
Yeah, because just again, you don't have to make technical, and I know you guys know this, you don't have to make technical analysis complicated, but you came up, you made a high in December, right? Pulling back. We've broken above that high, retested that high from December, and bounced back up. So that's a very key area to watch for. So as long as we don't close back below that, then it's making a higher base.
Nice.
I don't care about the aftermarket, but Tesla, I guess, must have just released. It doesn't look like they released. They released a few days ago, didn't they?
That's what I thought.
Again, you guys are seeing this. We're recording this on Tuesday, but I've got either a bad print or something because it went up to 359.81 on my live prices over here.
No, it's trading 182.35.
Yeah, it's there now. But I've got a print of 359.81 aftermarket.
Must have been one of my guys heard his ears burning, said, I got to buy some Tesla.
Yeah, that's a bad pick.
Bobby, before we go, I got home today. My wife's not home, but on the counter was, when she cuts the eggplant like this and then puts a little salt on it to draw some of the moisture out, which I think means we're having eggplant parmesan for dinner tonight, which I'm very excited about. My wife can cook. She can cook very well. And she does sometimes an eggplant with chicken thighs, like a chicken and eggplant parmesan together. Oh, Maron. You're going to like it.
I got a little tip from Mom Iachino for you if you want. She's already done it, so don't worry about it. If she doesn't peel it, try it peeled next time.
Oh, really? Interesting. Yeah.
Tell her to peel the eggplants. She's retired now. She got the time. Peel the eggplants, cut them into discs, do the salt to draw the water out, and then, wait till the water's out and go from there. Real quick, Mint Mobile, unbelievable. No problems at all. So you guys really ought to try doing it. I don't feel like I have done anything different except save myself about $180 a month.
To not go and just check it out seems silly. Click the link that we provide. If it's the same service for $180 less a month, it's what we like to call a no-brainer. That's the free money.
So Mike, where can people find you? But
hold on, I got to jump in on this because, I have nothing to do besides I converted myself, my wife, and my parents all to Mint Mobile. And we converted back in January and no issue.
It's outstanding. So, converted, it sounds like you're changing religions or something, but I like it.
Kind of is the way people deal with their cell phone companies. A couple of struggles to go from a company that has okay service to a company that has just as okay, if not better service, and save yourself $180 a month. And it's like people are asking you to convert to Catholicism from Judaism or something. I mean, it's not that complex.
Yeah.
It's not.
Don't overthink it. Keep it simple, stupid.
Not about Jesus or anything. It's just a cell phone thing.
Okay, I gotta go soon. There's a couple things I wanted to say first before we go. None of this works without you guys and your support and your loyalty to this, and we can't express our gratitude enough. The reason we start this, our mission statement is, we both are 20-year veterans of mainstream media, as we call it. It's a lot of it's bullshit. A lot of it's been poisoned by sponsorship and sponsors that influence what's reported and what you're supposed to say for clicks, and we don't like it. What we want to do is build something between us and you guys that you can believe that at least when people are giving opinions, they're honest opinions. When people are giving facts, they're honest facts. So thank you guys, and thank you for joining us on the Future's Edge. I'm Jim Muriel. That's Bob Iachino. That's Mike Hartman.